Housing Best Practices Forum. Today's topic is Products, Programs, and Services for Minnesotans to Achieve Financial Stability. And we have Anna Lee from Excess Lending, Shannon Doyle from LSS Financial Counseling, and Ann Leland Clark from Prepare and Prosper. We have some coworkers here at DHS that have learned more about these Exodus Lending and Prepare and Prosper's products in the past, and they suggested this would be a great topic. I think we're really excited to see what kind of questions you all raise as we have this conversation. If you have questions and answers about the presentation, use that Q&A spot on the WebEx to enter your questions. We're mainly going to take those questions like at the end of the presentation. But if you have any burning questions, you can feel free to put them in there. And if there's any technical assistance, like sound goes out or something else with the WebEx, try to use the chat with Laura Fox here, and she'll get that, try to help you with that. So I'm going to turn it over to Ann first from Prepare and Prosper. Thanks so much for joining us, and always send us any other feedback that you have after our presentation.
All right. Thank you, Adrienne, for having us and for presenting on this forum. We're feeling really excited to get in front of such a diverse group of folks that work in housing support, case management, county and state level, et cetera. So what I wanted to start with, just kidding. Okay. What I wanted to start with is just a little bit of a snapshot of financial insecurity in Minnesota, and in general, just to set some context. What might seem as like a depressing start, but it's only going to get better because we're going to talk about solutions. So just to give you a snapshot of some of the stuff we're going to cover and the issues that we're addressing in the context we work in this space of sort of financial insecurity or financial capability, are some stats that kind of cover the gamut of the product, services, and programs you're going to hear about today. So across the state of Minnesota, there are 328,000 households that are financially underserved. What that means is they're either unbanked, completely disconnected from mainstream banking, using check cashers, payday lenders, cash, or they're underbanked, which might mean they have a checking and or a savings account, but are still relying on those sort of non-bank services to get by and to meet their needs. Somebody that does not have a bank account, data shows that they can pay anywhere from $1,200 to $2,400 a year on interest and fees alone, operating outside banks. The banking system, I should say, which is a sizable emergency cushion if that were to be recaptured in the families and communities that we serve across Minnesota. Moving into the next bullet, 1 in 4, that previous bullet is from the FDIC data. The next is from Prosperity Now. 1 in 4 Minnesotans live in liquid asset poverty, meaning they don't have enough in liquid savings to cover 3 months in the event of an emergency, loss of income, et cetera. And that's not broken down. That's just in general, everybody. That's not broken down by income or race. So also in 2018, more than 48,000 Minnesotans took out a payday loan. You're going to learn about payday loans in a bit. And the average APR is a shocking 217%. And I will talk to you about payday loans a little more in the presentation. Also, in Minnesota, so we're going to talk a little bit about sort of debt and credit right now. In Minnesota, 7 out of 10 high school seniors graduated. College seniors, thank you, graduated with debt, and the average borrower who was in debt had $31,734. Okay, when it comes to credit cards, of all households that use credit cards, 38% carry an average balance of $16,000. Now imagine an APR, or interest rate, of 15 to 20% on that debt. If somebody were to pay only the minimum, it would take 70 years and $60,000 in interest to pay that $16,000. And you see a lot of things that are anchored in paying the minimum. So we're here to tell you, this is just a snapshot to tell you about some of the solutions to some of these barriers and challenges that Minnesotans are facing. Okay. All right, so next slide is, I'm going to just introduce you a little bit to the continuum in our field, because you hear sort of word soup around this field. Counseling, coaching, education, what's the difference? So this is something I found from a colleague from Sage Financial Solutions that I adapted, sort of the continuum and the differences, and you're going to hear from us in the room doing very different things along this continuum. From the left, you've got basic financial education, which is, your classes that people offer. You can think online or in person. It's basically the transfer of knowledge or information, some of your financial education basics. You're going to hear today from LSS Financial Counseling, and that's topic-specific advice for financial goals or challenges. So what you're going to hear is about topic-specific student loans, credit cards, debt management, et cetera. Financial coaching is another sort of space on this continuum. And think about health and fitness coaching, or like Weight Watchers for your money. That's financial coaching. And it's goal and behavior exploration and alignment. And it's very sort of client-driven, working on whatever their own personalized individual financial goals are. And I will talk about a program that offers financial coaching today. Something that I know many people hear about is financial planning. That's a lot of sort of in your future self, comprehensive approach to determine how, when you have sort of assets, how you can meet life goals through proper management of financial resources. Think retirement, investments, et cetera. And then to this list, I added sort of the last on the right column, financial inclusion. So access to affordable financial products and services that meet the needs of the community, that are delivered in a responsible and sustainable way. So you're going to hear about access to an alternative payday loan refinancing program, and you're going to hear about access to a set of financial products today. That's why I added financial inclusion on this. Okay, moving on. Another way we like to think of ourselves is along this sort of spectrum of sort of where you are in your financial life, from survival to struggling to stable to wealth surplus. And we know that many of our families move along this spectrum day to day, year to year, month to month, et cetera. So we plotted ourselves on this map as organizations, and you're going to hear from us in order from left to right. Let me just give you, in survival, I know many of you out there are working with people that in the survival and struggling sector of or part of the continuum here. In survival, we talk about meeting basic needs, employment, shelter, et cetera. And many of I know you on the call are working with people that fall in this. Struggling may be we have some income, but still living paycheck to paycheck. Sort of on the edge of survival, you've got subprime credit, overwhelmed with debt, not making progress, et cetera. And then stable is where Prepare and Prosper does a lot of its work, which is the goal of, if somebody has maybe enough income to meet their basic expenses, is starting to build a little savings and work on their credit and sort of get stable and work into that wealth surplus space. And wealth surplus is where we all sort of have a goal of being, where you're building assets, saving for college, building equity in your home, retirement, et cetera. So we plotted ourselves along this continuum, and you're going to first hear today from Anna Lee with Exodus Lending. Anna, I'm going to let you take over.
All right. Thank you, Ann, and thanks everyone for being on the call today. I'm really excited to be here and share with you what we do at Exodus. Like Ann mentioned, we are seeing people mostly in the struggling side of the spectrum, and part of the reason that is because the products that we're dealing with are designed to keep people there. So I'm from an organization called Exodus Lending. And our goal as an organization is to help the people of Minnesota escape the cycle of debt that's caused by payday loans and other types of predatory lending. And we do that by refinancing those predatory loans at 0% interest. So I wanted to talk to you a little bit about our history, the kind of products we're seeing with, and then walk through our program and how you can refer people to our services. So Exodus Lending started back in 2011 when a payday loan store opened near a church in South Minneapolis. The congregation was very concerned about what that was going to do to their community, and so kind of banded together and said, what can we do about this? Originally, we had a very strong focus on advocacy and legislation at the state level, but also realized that there's this immediate need for people who are getting these loans. They need a way out, and so they began the lending program in 2015. So just some background on what a payday loan is. It's a small dollar loan. They have extremely high interest rates. And what I mean by small dollar loans is it's typically an amount under $1,000. So, you know, $300, $400, $500 with extremely high interest. So the average that we have actually seen in our time is 301% APR. So in addition to that high interest, the loans have to be paid back in full on the borrower's next payday. So that's where the name comes from. Someone takes out a loan, and in 2 weeks on their next payday, they have to pay back the loan plus the interest and fees. And so this often creates this cycle where people aren't able to pay back the whole thing. So they just pay the interest and fees and end up reborrowing the principal over and over again, which leads to this cycle of debt. So here's some stats. This all is from our internal data as well as information we got from the Minnesota Department of Commerce. So as Ann mentioned, 48,000 Minnesotans took out a payday loan last year. They took out more than 323,000 payday loans. The average borrower borrowed it at least 7 times. 59% borrowed at least 5 times, and 10% reborrowed at least 20 times. So that's 20 times every 2 weeks or every month they're going in and rolling this over, each time paying $20, $30, and not even touching the principal. An organization called Minnesotans for Fair Lending estimates that between '94 and 2014, more than $110 million was drained from our communities due to these loans. And our own analysis estimates that $9 million was spent in 2018 alone. So this is money that could have stayed in people's pockets. This is money that could have been spent on things like housing, groceries, childcare, or anything, but instead went to these outrageous loans. So this is an example of a loan that we actually refinanced for someone, and I'm sharing it with her permission. This person, you can see she borrowed $250. The finance charge was $28.16, which doesn't sound super bad until you do the math, and it was due in a month because she was on Social Security, and the APR actually works out to be 293%. This woman told me that she had this loan so long she had written out a whole checkbook's worth of checks on this loan, which is 25 checks. So for 25 months, she was just paying the $28.16, which worked out to be about $700. So more than double what her amount borrowed she spent, and she still had to pay the $250 principal on top of that. And this was someone who was on fixed income, which can be really hard to pay back these loans when you only have, I think she was getting $771 in Social Security a month. In addition to payday loans, we will refinance a predatory personal loan. We define anything with an interest rate above 36% to be predatory. These loans are usually, people get them online. They're harder to regulate. A lot of times lenders are exploiting some loopholes to get around what little regulation there is for lenders. And this lets them charge interest rates up to 1,200%. And in case you think I'm making that up, this is the actual loan that we refinanced with an APR of 1,204.5% interest. This person borrowed $475, and by the time they would have paid everything back, would have paid back $4,975.50. Yeah, not great. We also refinance title loans. Title loans are illegal in Minnesota, but they aren't illegal in Wisconsin, so lots of people cross the river into Hudson or Superior and get them. They have a similar payment structure to the installment loan, but with the added risk of losing your vehicle, of having your vehicle repossessed if you can't pay. And here's just an example of a title loan that we refinanced recently. So you can see they got $1,400 for it, annual percent interest rate of 304%. By the time they would have paid everything back, it would have been $4,600. So in case you aren't getting the message, these products are predatory. Lenders don't care about a borrower's ability to repay, and these products are not designed to help people. They're marketed as a way to help people have access to credit who don't have access to mainstream lending, but they're not helpful. They actually make things a lot worse for people. So what do we do about it? We will pay off a participant's loan directly to the lender, and then we work with them to create a fair repayment plan over the next 12 months. We don't add any interest or fees. We also report their repayment to the credit bureaus. That's new this month. We're super excited about it. And our hope is that by reporting the repayment with a fair loan terms, this will help people build credit and hopefully have access to more lending opportunities in the future. We have 4 eligibility requirements. You have to live in Minnesota. The loan has to have a payoff of under $1,000. The loan must be older than 30 days, and they do have to have a steady source of income. And the income can be, getting Social Security, on fixed income, pension, or it can be from a job. We just need to see that they have some sort of way to repay the loan that we're making for them. Just a note about the payoff being under $1,000. You can see those 2 loans, the examples I gave, they would have paid back more than $1,000, but because of the timing of when we caught these people and refinanced it, the amount needed to pay their loan off in full was still under that $1,000. So even if someone comes to you and they're like, oh, my balance is, $4,000, no, we can still work with them some of the time. Mm-hmm. So this is just some stats on our current program participants. This is as of last week. 63 are people of color, 68% are women. Mostly we serve the Twin Cities metro area, and that's just because we ourselves are located in St. Paul, but we do serve over 30 counties in Minnesota, and we will happily serve anyone from any county in the state. The median income that we see is $36,000 a year, and an average person's about 44 years old. Just note, anyone can get a payday loan. This isn't, a particular problem for a particular group. Anyone with a job or Social Security and a bank account can get a payday loan. Some of the time they don't even need a bank account. So this affects people from all walks of life. Just want to walk you through how our program works quickly. Step 1 is people become aware of us either from referrals from other organizations. They find us online, they do Google search. Word of mouth is actually our biggest way that people hear about us, and they reach out to us. I'm the program coordinator, so I'm the first point of contact. I talk with people, I explain our process and go through the eligibility requirements. If they meet everything, we make an appointment and we do an intake. For people who live in the greater Minnesota area, we do everything over the phone or email, so we can do remote enrollments. Then we pay off the loan, and they make their payments based on the payment structure we've created for them. And then when they're done, we say, good job, congratulations. And we also have some incentives that we offer throughout the year that they're with us. One of which is if they go and speak with a financial counselor, we will reward them with $50 per session with that counselor, up to $150, because we know loans like this are usually just one part of their story. Do I press? Oh, there we go. This is just some notes about our stats since we began lending. We've had 126 graduates. We have 184 currently enrolled. Average is about 700 that we do for people. I really like this stat that says we've saved about $768,000 for people. So if they would have kept paying their loans, that's all money that would have gone to these lenders, and instead isn't and is staying in our communities. I'm also really proud of the fact that our repayment rate is greater than 90%. So our default rate is actually lower than the default rate of people defaulting on their student loans. So, which I think just goes to show that, if you have fair terms, people want to pay. So how can you refer people to us? They can come to us, our website, exoduslending.org. There's a refer button that you can refer people. They can also take a short eligibility quiz and fill out their information. You can email us directly, info@exoduslending.org, or you can call me. That is my extension number. And that's all I have for you. I'm going to turn it over to Shannon. All right, good afternoon, everybody. Bear with me, I'm sick. I have a pretty bad cold, so if I start coughing in the middle of the presentation here, just bear with me for a minute. Can everybody hear me okay? Unless I hear differently, I'll
Right.
assume you can. All right, so yes, I'm with LSS Financial Counseling, and our mission at LSF is to achieve economic health and security for all. It's not a very high goal, is it? But we do believe that people can conquer their debt and gain control of their finances and achieve financial stability, and there's many different ways that we do that. Technical difficulties here. So our services, the way that we help people to achieve our mission is through one-on-one financial counseling services, whether it's credit and budget counseling, student loan repayment counseling. We do various types of housing counseling. We help people when they're looking at buying a home, get into home ownership counseling, and then we help people stay in homes with foreclosure prevention counseling. And then for senior citizens also, we help them to look at reverse mortgages. However, with the reverse mortgage, it's really more or less an educational session, pros and cons. We aren't really able to tell people if they should or should not take out a reverse mortgage, but we want to make sure that they know what they're getting into if they do. Speaking of Ann's continuum of financial services, we do provide the financial education as well. We are hired by different organizations to come out and do workshops. We do a lot of lunch and learns and things like that. And we also provide financial wellness plans or a program for organizations, meaning it's sort of like a benefit that would be offered through our HR department, or we also work with other credit unions and places like that to provide those benefits for their members. We have 10 locations throughout the state and one in Wisconsin where we can actually do in-person counseling. We provide counseling online and phone nationwide. And we have people that speak 3 different languages, English, Spanish, and Hmong. So it's just nice that we're able to offer those different services in accessible for everyone. I don't need to go into this too much because Anna did such a great job talking about payday loans and title loans. But we do like to talk about new types of debt that people can watch out for. And you already heard about the huge impact that payday loans can have on personal finances. There's also different things out there like online loans, lending clubs. The online loans tend to have a pretty low bar for entrance, I suppose you could say. They often have teaser rates where they're going to offer you a very low interest rate at first, but in the end you might end up with a credit card equivalent. And then, of course, there's debt settlement scams. And with debt settlement scams, the way those work, in case you don't know, is they will tell people who are struggling to pay off credit cards, typically it's credit cards, they'll tell them to pay the company instead of their credit card company, and the company takes the fees and doesn't pay the credit cards, and so therefore starting a huge cascade of issues for people who are entering into a debt settlement program. We like to call them scams, but so of course they're going to have late fees on their credit cards, and interest will accrue, and not to mention hugely damaged credit from missing payments. And oftentimes being in a debt settlement, working with a debt settlement company can escalate things legally more quickly than would have been had they tried to just deal with things on their own. So a really, really good thing to watch out for. So if anybody, if you or any of your clients that you work with, are approached
by a debt settlement company, it's important for them to understand that, you know, they really only tend to settle about 1 out of every 17 accounts, which is not a very good track record. And there are also, sorry, I just lost my train of thought because something flashed up on the screen. They're also very high pressured sales. So if somebody is telling you that, you know, you need to sign up with something right away, do it right now, this deal is only going to last for, you know, it's only going to be available for 24 hours or something like that, those are some signs that that may be a debt settlement company that they want to stay away from. Another thing is when a debt is settled for less than the full balance, there can be a tax liability, and oftentimes the companies don't tell them about that. So that's some important things to know about that. Let's see here. All right. So one of the big things that we talk about, or that we work with these days, is student loan debts. And, you know, right now there's about $1.5, $1.6 trillion in student loan debt out there. And, you know, this, of course, has a big impact on the housing market, just because if you think about it, for every $250 that is spent on student loan payments, that equals about $40,000 less in mortgage that somebody could get approved for. So that can, in a tight market like today with, you know, costs going up, and especially for first-time home buyers, that can make the difference between being able to buy or not buy a home. But I think it's surprising to see that when we think of student loans, we really tend to think people in their 20s. But as you can see by this graph, the highest number of student loan debt is actually being paid by people 35 to 62. It's and higher. It's surprising that when we have been counseling, we've worked with people who are on SSDI or SSI or something like that, and the defaulted student loans can actually, the federal government can recapture part of their benefits, so they can garnish those benefits. It's the one kind of debt that they're really not protected from. And so we've worked with several senior citizens who are being garnished for their student loans, but there is a solution, which I will talk about in a minute. But we work with people to help resolve that defaulted debt and get back into good standing, which doesn't necessarily always mean that the debt is going to go away. Sadly, there's going to be a lot of people who are paying on student loans until they die. The good news is that at least the federal government discharges your debt upon death, which is, you know, at least there's that. Yep. Also, as Ann talked about earlier, credit card debt is a huge growing problem. And as you can see, once again, there's this idea that it's actually younger people that are affected by this debt more often, but that's just not the case. As you can see by this graph, we've got well over 50% of the credit card debt going to people who are 40 and older. And, you know, this of course, once again, becomes, if you couple that, especially with student loan debt, it becomes an issue for people who want to buy a home, people who might want to retire, but especially if you are on a fixed income, it can be, you know, you are caught in that minimum payment trap often. And, you know, if you're someone who has that average $16,000 balance on credit cards, you know, what do? You're going to be paying off that debt once again until you die. So what do you do about it? At LFS, we do have some solutions for this. Oops. I went too far. I apologize for that. Oh, yep. You know, I had some animations on here, but
oh, we might look at those.
Okay. All right. Well, that's okay. That's fine. So behind these two screens, there's a debt payoff calculator. So, you know, it's just kind of, if you're looking at different solutions, you can look at debt payoff calculators. I tend to like the one from NerdWallet. They're kind of my go-to source for that stuff. And then we have the debt snowball. And, you know, and those are two ways that people can really manage debts on their own. With the debt snowball method, the way it works is you start either with the highest interest debt or with the lowest balance. If you go from a psychological perspective, people tend to be a lot more successful if they start with the lowest balance because they end up getting that paid off more quickly. Once that first balance is paid off, you roll the payment into the next account that you want to pay off, and so on until everything is paid off. And that's a system that can be used with any type of debt. It could be medical bills, credit cards, car loans, student loans, and all the way up to your mortgage, getting that paid off. So that could be a great system to look at if you're trying to pay down debt. Now, the way we work with people with student or with credit card debt is through our debt management plan. So if you think about that earlier statistic, there's $16,000 average of the 38% of people who carry a balance. So I understand this balance is a little off, but if you've got a 18.9% interest rate and you only pay the minimum payment, it's going to take you about 60 years to pay that off, and $55,000 in interest repaid. So that's a huge chunk of money that otherwise could be going, you know, to a retirement account or even just a basic savings account so that people could have that 3 months of savings and breaking that paycheck to paycheck cycle. So a minimum payment on a $15,000 balance is going to be about $300. With a debt management plan, what we do is we work with the creditors to get their interest rates lowered so that more of their money is going to be going to that balance. So you can see the difference here is the time off to pay with the lower interest rate or the time to pay off with the lower interest rate, and the fixed payment, the $300 payment, is 5 years and only $2,786 paid back in interest. That's obviously a huge savings in both time and money. But even so, if somebody still wanted to pay this credit card debt off on their own and they just kept that payment even, $300, because of course with the minimum payment, if you think about it, it goes down with your balance because the payment is based on the balance. So every month you have a slightly lower payment, so that's why it takes so long with the minimum payment. If a person just kept that $300 even at the same interest rate, even then they would save time. They'd be able to pay it off in 8 years, and would only pay back about $15,000 in interest. So I mean only, but it's still a lot, but a lot better. And so these are the solutions that we help people look at when they come in for a session with their debt. And then, you know, there's other things to think out. One of the other things that we work with a lot with people is building their credit. I'm sorry, it's this cold, it's killing me. So we work with people on improving their credit. So, you know, it really, whether you're on a fixed income or not a fixed income, credit matters so much. And there's so just for one example here, if we look at insurance costs by credit score, you can see that if you have excellent credit, it's about, you pay about $1,000 a year around there. Good credit, just good credit goes, excellent credit would be $750 and higher. I guess I should let you guys know that. Good credit is about $680 to $750. And then if you look, I would love a hot toddy, thank you. If you look at poor credit, they're going to be paying not just double, but 2.5 times somebody with excellent credit is paying. And what I'm not going to be able to show you because of the animation is, I apologize for that, is somebody who has an excellent credit score but has a DUI is only going to pay about $1,500 towards auto insurance a year. So you can have a DUI, and this is not me telling you to go get a DUI, by the way. Speaking of hot toddies. But it's astounding because we used to have people come into our office and, you know, and their insurance would be $200 a month, and we're like, well, what, I mean, you've got to have a DUI, right? I mean, or something, a teenage driver, something like that. No, it was really based on their credit, and once we realized this, and so if you think about that, because unfortunately, people on fixed incomes tend to be affected by credit more because of the fact that, you know, what we see is not always credit card debt, but it's more like cable bills that went unpaid or cell phone bills that they weren't able to pay. Things like that, it's more collection debt, which is a more difficult type of debt to deal with, but another type of debt that actually LSS works with people on, excuse me. Okay. All right. So along the same lines with credit, of course, this just shows the financial impact of credit score beyond auto scores. If we look at a $200,000 mortgage with a credit score of 660, which is on the border between fair and good, you know, well, this is maybe a couple of weeks old, but at one time, I know it's hard to keep up with the interest rates, but at one time, the interest rate would have been about 5%, which translates to I'm sorry, I'm losing my voice as I speak. Okay, which translates to about $1,000 a month payment and $191,000 in interest over the life of the loan. If you look at the 720, they saved $60,000 in interest just by having a 60-point higher credit score. So once again, you know, I mean, that's $60,000 that could have gone towards, you know, that 3-month savings, retirement, college savings, other types of things. Same thing with a car loan. That car with a lower credit score is going to cost you $100 more a month than someone with a higher credit score, and $5,000 more in interest. So that's a significant impact on somebody's bottom line. But even if we look at the difference in the monthly payments, it equals $269. Now remember, every $250 that is going to another type of payment is $40,000 less. Obviously here we're talking about somebody who has a mortgage, but it does reduce the amount of mortgage that you can obtain in the long run. So big impact there too. So, okay, that's not gonna work either. I have a lot of animations here. I am so sorry, you guys. I didn't know that that wasn't gonna be able to work. So this is where I use the credit score pie chart, but instead you get to look at a bottle of Coca-Cola. I apologize.
I wonder if you can move that.
It's a PDF.
Yeah, it's a PDF, so I can't move it. Yeah. So I apologize, you guys, but if you think about, picture a pie chart in your head. We're going to have to do some visualizing here. Picture a pie chart in your head with five unequal pieces of pie. So about 35% of that piece of pie is going to be how do you make your payments on time? So it's very important to pay on time every month, at least a minimum payment on something. So that's 35% of your score. Now this is one that not everybody knows about so well, but the second biggest piece of your credit score is how much debt you're actually carrying. So if you have a credit card with a $1,000 balance and you charge that up to $900 every month, even if you pay it off, if your credit report is reporting a $900 balance every month, that's a 90% utilization rate, and that's going to pull your score down. So We caution everybody to try to keep that at more like 30% of your credit line. So it's really important. So those two factors right there. It's called your debt to income utilization, not debt to income, debt to credit utilization, and making on-time payments. That's 65% of your score. So if people can just focus on those two things right there, those are the largest things that are in their control. And then we look at the other three factors in your credit. 15% is how long have you had a credit history. So it's not really. That's not something you can have a lot of control over if you're younger or if you're just starting to build credit. That's all stuff that takes time to build. The other two are in your control, though. So 4 out of the 5 factors in your credit score are in your control, if you think about it. And the last 2 are how often are you applying for credit, and then what different mix of types of debt do you have? And those 2 are only 10% each. So, I know a lot of people get really worried about, oh my gosh, I mean, the inquiry thing. A lot of people are like, oh, is this going to be a hard hit on my credit? Is it? The only time you need to worry about that is if you are applying for a lot of credit. Okay, so it's important to know that if you're working with somebody whose credit has been hurt by, for whatever reason, late payments, defaulted loans, collection accounts, they absolutely can get back on the path to good credit. It takes time. There is now, regardless of what some of those credit repair companies out there might say, there is no quick, easy way to clean up credit. So it's really important for people to know that spending $600, $1,000 to pay someone to clean up your credit is not worth it, because there's no magical way to clean up credit overnight. The best place to start is by cleaning up the past. So making a plan to pay off collection accounts, disputing incorrect items, but definitely not working with credit repair companies, because they're charging you money for things that you can do on your own for free. So no reason to ever pay someone to work on, to fix your credit for you. And then, excuse me, on the right hand of the two-handed approach to improving credit, taking positive action. So pay bills on time, keep balances low, apply for credit only as needed, and of course check your credit report annually. And the reason for that is to make sure that there's no mistakes on it. Now, these are all things that LSS Financial Counseling helps people work on. It's actually very easy to access sessions with us. Like I said earlier, we offer appointments in person, over the phone, and online. And there's the number right there that can be called to schedule an appointment. It's 888-577-2227. And if someone wanted to complete an online appointment, they could go to debthelp.lssmn.org. That's kind of nice, because sometimes there's a lot of shame and embarrassment around money issues. All of our counselors, I can tell you that the number one thing that our clients say is there's 2 things. I've never felt judged. Our counselors do not judge people at all for the situation they're in. In fact, most of us have been there ourselves, and so we know what it's like to be struggling or to be receiving debt collection calls and things like that. So we're there to help people through that. But the second thing that most people say to us is, I wish I would have known of this earlier. I wish I would have done this sooner. And like Exodus Lending, the number one way that people hear about us is through referrals, it's word of mouth. And I always like to say, I think that means that people are pretty happy with us, because I don't think, oops, sorry, I had trigger finger there. I don't think that, I forgot what I was going to say. So anyway, sorry, this cold is killing my brain. If anyone has questions, please, you can feel free to email me. shannon.doyle@lssmn.org. If you have general questions or just want to learn more, please feel free to visit our website, lssfinancialcounseling.org. And thank you so much for bearing with me with this cold.
Okay, let's give that girl a hot toddy and rest up her voice, okay, before people have questions, because I'm sure they will. So I'm gonna try to take 15 minutes to talk about Prepare and Prosper, because I want to open it up and answer some questions. So this is Ann Leland Clark with Prepare and Prosper. Thank you to my two colleagues for preceding me. So here is our mission. We work with volunteers. Volunteers are our workforce for the most part. Work with low, moderate income people to build financial well-being through free tax preparation and financial services at that money moment of tax time, products, and coaching, and by changing systems to create economic opportunity. All right, so what does this look like? By the numbers, as of sort of the end of the last tax season, this is who we are. As I said, volunteers are our lifeblood of the organization. We have over 600 that gives out over 27,000 hours a year. And they do that in various roles in our pre-tax clinics and our financial coaching program, and administratively. Each year we serve about close to 12,500, upwards of 13,000 every year with free tax preparation across the Twin Cities Metro, and return $24 million in tax refunds, and that's federal, state, and property refunds. At that tax time money moment, which is a money moment for anyone, it's like a reset moment, whether you are owing a balance, it's a time where you can, like Shannon said, check that credit report and be referred to LSS, or you can set some aside for bills or for savings. And nearly $2 million was saved by 1,300 of our taxpayers who are setting aside. We have products at tax time, from savings bond to savings accounts, where people can set some aside and save. Also, we have a financial coaching program I will talk about, where we see about 166 people each year. Our volunteer coaches are paired one-on-one to work with people on their own individual financial goals, that I'll talk about later. And then the sort of newer but not new program is called FAIR, Financial Access in Reach. And this number is closer to 125 people are enrolled in the FAIR banking product that I'm going to describe later. And that is, of all our programs, FAIR is the one that's statewide for anyone in this call who is outside of the Twin Cities Metro. Okay, let's start with free tax prep. We are sort of longest known for our free tax preparation, but we certainly do more than that now. But we see a lot of people, again, nearly 13,000 a year. We have IRS certified volunteers who actually have certification levels greater than what you're going to see at H&R Block, because there are more sort of standards to be certified as a volunteer. They're real passionate about taxes, about preparing taxes. So imagine sort of over 500 people that geek out about taxes. We have sites across the entire Twin Cities Metro in Minneapolis, St. Paul, Bloomington, and Hopkins. And these are a variety of appointment and walk-in sites. And I'm going to talk also a little bit about a remote tax model, because I learned that a lot of folks in this crowd today work with folks maybe on fixed incomes. So I'm going to talk a little bit about our remote program in a bit. We have multiple locations, as I said, and we are open year-round. We're open in the summer and fall, and I believe we are the only VITA, Volunteer Income Tax Assistance Program, open year-round in Minnesota. So we like to keep busy. So who qualifies for free tax preparation? So if somebody has an annual income for somebody, so individuals, I mean one person on a filing return, it makes $35,000 or less, they can qualify. Families, so 2 or more on a return, that can be a single parent, for example, makes $55,000 or less to qualify for free. And then self-employed, we have a self-employed tax clinic that's sort of a special tax clinic for sole proprietors, and if they are making, and that could be an individual, $55,000 or less. So those are like high-level income guidelines. But then self-admittedly, I am not a tax expert, but I have experts back at the office that shared some charts with me. So there is a difference between who must file and should file. And so this is a chart of who must file a tax return in the United States. And that you know, there's always, it's taxes, it's complicated, there's caveats to everything. So like there's a lower threshold for self-employment, for example. So here's a chart that I just share with you. This webinar is shared with you. I will not go over all of it, but I do want to focus on the next slide, who should file. So I know that many of you in this audience potentially are working with people on government assistance, on GA, on SSI, SSDI, that might not fall within the income guidelines of the previous slide, but could benefit from certain tax credits. So that is taxpayers who have had income tax withheld from their pay, because they don't owe, they could be getting some back. And then qualify for these following credits: the federal earned income tax credit, the state working family credit, the additional child tax credit and American Opportunity Credit, and the K-12 education credit. So these are just credits that they might be eligible for regardless of whether or not they fall within the previous charts. So they might not have to file, but they qualify for credits or have had income taken from their paycheck. I think a really good one here is in Minnesota, we have a great renter's credit. And people can get a CRP, a certificate of rent paid, from their landlord and file taxes, even if they don't have to, and still get income back from that renter's rebate. So that is something, I think that is relevant to those in the room. Okay. All right, I just wanted to also highlight something specifically because of the audience that might be participating in this call. We do have a unique tax clinic, or a unique tax clinic called the Remote Tax Clinic. So we were, you know, it sort of goes to our ethos. We were founded by a group of justice-minded accountants, yes, they exist, who believe that a person's ability to pay shouldn't affect their ability to access quality tax preparation. I think access is big here. What many people don't know about our programs and our services is that nearly 2,000 of the people we reach, of the total 13,000 a year, don't visit one of our community tax clinics across the Twin Cities, but instead have their taxes done sort of remotely. So this program was built for individuals who are aging, have a disability, or are limited by their health, where it's really difficult to attend a busy and bustling tax clinic that requires up to 4 hours of wait time. So instead, we created an alternative preparation experience for those who navigate the world with sort of unique set of circumstances, that we create an option that works for them. So the income of people using this program is usually not enough to require them to file, and many aren't aware that even though their income is below that threshold, they're eligible for a refund. So like that property refund I talked about. So given this, there's a lack of awareness and obstacles people face to just gathering all the information. We often partner with this program. Brenda is the person you see who runs this program in this photo. She will partner, adapt the typical walk-in preparation experience so people don't have to wait for that time. Instead, Brenda works with people one-on-one, and oftentimes with their family member, caregiver, managers of group home or facilities they're living in. We have this whole process that starts with a checklist to get the paperwork, and we usually have a liaison going back and forth where you meet in advance to go over what paperwork is required. And then it takes several weeks for our group of what I think are like the secret volunteers that work in the basement who prepare these returns. Takes several weeks to get that done, but then whoever it is that's working on behalf of these individuals, the individual will come back and have do the sort of the signing and return process. So it's just we see that many people who are aging or who are on limited incomes really depend on that tax refund to help pay things like their medical bills. And for many living in group homes, money is tight, and refunds provide flexibility and freedom to buy necessities, see family, et cetera. So this is a unique program. If you want to learn more about it, click the image on the PowerPoint that's sent out, or just go to our website and read and find the Spark article where you can find contact for if you're interested in partnering with the program. Okay, stories are great. I'm going to skip past Roger's story to talk a little bit about our other programs because I want to get this all in and get to your questions. So Money Mentors as mentioned, is our financial coaching program. Again, like all we do, this is a volunteer-based program. Volunteers are trained over 20 hours to take a non-judgmental approach with powerful questions to working individually with people to reach their financial goals. This program is located in the Twin Cities, where it's at our office. We are off of 280 and University on that border of Minneapolis-St. Paul, so it is geographically limited. But individuals, we serve about 166 individuals a year in that program, and we have about 40 volunteer financial coaches, and they meet one-on-one on Tuesday evenings and Saturday mornings. You choose once a month, either Tuesday evenings or Saturday mornings, to meet with a volunteer coach to work on whatever individual goal you have. For some, it can be legitimately opening the pile of mail that you have piled up with bills. And for others, it can be saving for a home. So it's very individualized. And in addition to meeting one-on-one with their coach, they're going to meet with the peers that are on that same sort of shift or night or morning. And so they're going to take time to build that sort of social capital and share ideas and resources with each other and their peers. So that's another requirement of the program, is to meet with peers. So Money Mentors is really for folks that are stable. Those who qualify, obviously they're willing to invest the time monthly to come and visit, Prepare and Prosper, and meet with a coach. And they're willing to sort of make changes in their financial life, however small, to take steps. We serve in this program individuals who are making less than $65,000. Families who are making less than $65,000, and again, that's sort of 2 or more, and individuals 35,000 or below. And really, this is for in that continuum, folks who are sort of in this sort of moving from survival to stable, because they have to pay their basic expenses and not an immediate financial crisis. So because they're going to focus on what their financial goals are. And again, they have to be able to meet either Saturday morning or Tuesday evenings for 6 months at our main office. So if you want to learn more about this, here is a link to our website where there's an application and more information. And of course, my information is going to be shared at the end of this presentation. And of course, the application does not guarantee acceptance in the program, as you saw, because it has to fit the criteria of the program. But we do not just turn people away. We will refer them to an appropriate resource. Okay, lastly, I am going to quick cover the Fair Financial Solution, which is statewide. So this is the one program that we are scaling statewide. It is, again, stands for Financial Access and Reach. And what it is, it's a partnership with a bank. We have been opening accounts. We have been facilitating access to financial products since 2006 in our tax time program. And we have colleagues across the nation, colleagues across the state who said, how do you get banks to partner with you? So we said, you know what, we're going to do this. We're going to partner with a bank and bring it to you. So we have partnered with Sunrise Banks, a local bank with a national charter. So they are scalable because of that, and paired up and created, we actually did a lot of listening around what are the fees, features, eligibility, accessibility, what are your financial goals and dreams, and how do products get you there. And we created the FAIR model. So what FAIR is, like, as the basics, I'm going to talk about the products first and then the model. So the products are a checking account, a savings account, and a credit builder. So the checking account has no overdraft and no minimum balance requirement, meaning you can't spend more than you have, and in the months where you have $0, you're not going to be punished for it. You're not going to be charged that $14 maintenance fee if you don't have enough money. There is, though, for sustainability reasons, a $3 monthly fee on that checking account. We often, and that was lower than what when we asked, like, what are people's fee tolerances, we ended up on a place that's actually lower than people's average fee tolerance. Because I want to say that free is not free in many checking accounts, especially if you overdraft. That's an average of $36 on a fee to overdraft. That's just one overdraft, and of course, if that minimum balance, if you're not meeting that minimum balance, at times it can be $13 to $15 a month for not meeting that monthly minimum. So the checking account is designed not to ding you when you're down. Big thing about these products is it's offered to those regardless of check systems. What check systems is it's a banking history. Essentially it's your credit record, but for your banking. So if you have walked away from banks and you have not paid, let's say you overdrafted, gotten a cycle of overdraft, had to walk away, you are now on a list called check systems, which essentially every bank can look at and say, no, we can't offer you a checking account because you haven't paid X bank back. So the beauty of this is that it's offered regardless of somebody's banking history, AKA their check systems record, except if there's like severe fraud, like check kiting or identity theft. The savings account is your basic run-of-the-mill savings account with very unexciting interest, but competitive interest. Again, no minimum balance. It can be tied to your checking account so you can transfer money back and forth. So it can be sort of low barrier savings to build that emergency savings habit. And then the credit building loan, I want to caveat by it's not a loan given directly to the customer. What it is, it's an interplay between a certificate of deposit, which is a secured savings account, and a loan. So what happens is the bank will loan, quote unquote, loan you, it's like a layaway loan, put money, that $500 into a secured CD. And what happens is that people pay $30 a month. It's treating yourself like a bill, and they're paying towards that loan. So what happens is over 18 months, somebody has saved $30 a month for 18 months and builds up $500. So in that CD, they've built up that $500 plus any interest earned on that CD minus an 8% APR that's on the loan itself. So the cost, we're really clear about this, the cost of building credit is going to be about $56 over the life of this loan. But you'll have 18 months of on-time payments, and you'll have savings unlocked at the end. So what the beauty is that Shannon, this sort of leads past Shannon, you saw what it costs to have, it costs a lot of money to have lower credit over time. So this is a tool that's sort of a safe tool. You can't spend more than your limit. You can't spend 100% of it. It's more controlled. It has guardrails, and it's taking that positive action that Shannon said to build your credit. There is so I should say there's a $25 application fee. There's 8% interest on the loan. Together, that's a 14.74 APR. This is because we are a nonprofit offering these products, people are going to know all of this up front before they agree. So let me talk about the model. The FAIR model is not, it's different. It's not offered in bank branches. We have been facilitating access in our tax clinics. LSS has been facilitating access to products for years and years. So what this is it's taking the model of onboarding and promoting products in places where people work, worship, trust in the community. Right now, there are 4 organizations offering this in addition to Prepare and Prosper. Lutheran Social Services is one, Community Action Ramsey, Washington, Emerge in North Minneapolis, and Build Wealth. As I said, these are consumer-focused products built based on listing from actual customers. We are trying to build a digital model, so online and mobile banking, because there are only 6 branches, and we're trying to build that branchless model with Sunrise Banks. So you can take a photo of a paper check, you can use point of service to get cash back, et cetera. And of course, with this trusted distribution model, you're going to get a lot more coaching and support than you would walking into any bank branch. Where there's no sales goals like you see in many financial institutions. We're going to really talk through your financial needs. Is FAIR a match? Is something else a match? And then once you're signed up, we're going to support you to actually adopt the account and reach your goal. Okay. So to learn more about FAIR, anyone can go to our website, learn more at fairfinancial.org. We are currently in the Twin Cities Metro. If you're outside of there, please contact me and let me know, because we could probably make it work. But you can go to this website and make an appointment at our main office to get a customer signed up for FAIR. And we also can come, we do these like pop-up sessions where we go out into other organizations if they have like 4 or more people and actually do remote enrollment. Okay, that's it for Prepare and Prosper. It for our presentation. This is my contact information and my phone and my email. We can also get you materials if you want to promote this. I think that I'm going to speak for all of us. Yes, they're all nodding. Yep. That we can all get you materials if you want some brochures or any content to promote any of these services or use these with your customers. Okay. I'm stopping. Questions?
Great. Yeah, thank you so much, everyone. We're going to start sending some questions in. We already have a few coming in. So we can start with just the first one that I see here, and I'll read it off, and then whoever wants to take it can. Someone asked, and let us know if you have the answer to this, regarding so housing or mortgage lending. Do you have any programs that help Somali families buy a home? Because this, she's heard that, yeah, for religious reasons, they're unable to borrow with interest.
Oh, goodness. People have tried. I feel like.
It's a tough one. I think there was an organization that was trying for a while, but I don't know that they're still around.
I know Sunrise Banks was trying to conquer this, but I don't know if they're still working on that. This is one, I think all of us are sort of,
Yeah.
you know, we'll look into it too, and we'll ask our colleagues to see if there is a resource.
So, I mean, I would say, but this isn't specific to Somali families or Muslim families, but African development.
Yeah,
Center,
that's what I was
right?
gonna
But
say.
they have home stretch workshops, but I don't think that's, obviously that's.
Not a product.
Right,
Yep.
and obviously not so.
I've heard a lot of fits and starts in this space.
Yep.
I've heard a lot of fits and starts of products that people are gonna develop, but then it never comes to fruition, or like, but I'm not aware of anyone actually figuring this out, but I think, Adrienne, you're right, if there's anyone that knows, it is ADC, African Development Center.
Yep.
Oh, okay. Oh, all right, next question, payday loan, or, day labor. So this may perhaps specific to Exodus lending programs, but we work with clients with very sporadic incomes. What type of regular income is needed for Exodus lending? Clients that may have seasonal work or work day labor for a few days a month, or work strictly for cash.
Right. We need to see verification of their income, whatever that looks like. And the reason we ask for that is because payday lenders don't. And we want to make sure that whatever repayment plan we are setting up for them works for their budget. That looks differently for everyone. So our typical repayment plan is the 12 months, but we can do 18, we can do 24, depending on how much, it works with their budget. But we do need some type of verification of what they're earning. Whether
From an employer.
Yeah, from an employer, or, bank statement showing that you have income coming in. We can be flexible on that, but we do need to have just some type of income coming in, because we want to make sure that we aren't just making them another loan that they can't afford.
Yeah.
Does that answer your question? Hopefully.
James.
Yep.
I have another question coming in, so you kind of briefly went over, but if you could just review, which of the services, besides the services that Lutheran Social Services offers, are available outside of the Twin Cities or in northern Minnesota specifically?
Our one-on-one counseling, we have 10 locations throughout Minnesota, 4 are in the metro areas, St. Louis Park, 2 in St. Paul, and 1 in Minneapolis. And then we have offices in Virginia, Duluth, Wilmer, and Brainerd. Mankato and Rochester. So, and then we have 1 office in Wisconsin for in-person counseling as well. Otherwise, if someone is far away from one of our offices, we can schedule appointments by phone, and there's also the online counseling available too. And I saw another question up here on the screen. It looks like there's no fee to access our service, and I'm sorry I didn't say that. It's absolutely free. There's no income guidelines. We work with everyone from, people on general assistance, SSI, all the way up to people who are making 6 figures. Because, debt affects all of us, and debt and credit and money issues, Also, people don't have to be in crisis to meet with us. If somebody is just looking like, I never looked at my credit report before and I don't know how to access it, we have a specific appointment type for that. If somebody's just like, I've never put together a budget before and I want to learn how to do that, we'll work with people to do that too. So it's really open and available to anyone.
And could either of you explain which services, if any, you offer outside of the Twin Cities or northern Minnesota?
Yeah, so this is Anna from Exodus. Like I said, we can do things statewide. We're able to we've got people up in Ely, Duluth, down in Rochester. It just means that all of our correspondence is going to be over the phone and through email, but we're certainly equipped to do that.
Okay, and this is Ann with Prepare and Prosper. So our tax preparation is in the Twin Cities, here across the Twin Cities Metro. Our financial coaching program is very place-based in St. Paul. Always looking for ways to figure out how to scale that, but there's something magical happening in person there of having that community. But FAIR is a program that we are looking to scale statewide, and so that's one thing so the FAIR model, as I mentioned, is remote distribution by places in the community where people live, work, worship, receive services. So we're actually looking for statewide partners who are sort of interested in learning how to sign people up for FAIR, obviously with nothing but support and technical assistance from Prepare and Prosper. So that is a program that we are looking to scale statewide. We are in the process of identifying partners. If there is anyone on this call that is super jazzed about offering this in their community, reach out to me. For now, we could probably figure out how to do some of, like, if it's one-on-one enrollment, if you're like, I have somebody that can't get a bank account, that needs to build their credit, we could figure out, like with Anna, what they do with Exodus Lending, we could figure out how to do that in a sort of, it'll be a little bit of a process, but we could figure out how to do that over email and phone.
Other questions? Laura?
Let me just take a look here and make sure I didn't miss any.
One more thing I want to mention regarding Exodus Lending, the repayment. We can update the terms at any time. So, I've got people who call and, if they lose a job, they're off work for medical reasons, they don't have the income to really keep paying the amount that we originally agreed on. That's fine. They just need to let us know, and we say, okay, how much can you do a month? I just signed a loan agreement for someone who's going to give us $5 for the next 200 months because that's what she can afford right now. We're happy to work with people. So yeah, if people are having sporadic income, we can be flexible and work with them.
Great. Yeah.
We still do have time for questions if you're thinking of them. You can put them in the Q&A, or if you're having any issues with that, you can certainly bring that to our attention, and we can unmute you if that's needed, which is preferred because there's so many people on this call. To make sure you can hear clearly, just have everyone muted, but we can take you off mute if that's needed.
Great. And then there was a separate question about housing stabilization services coming out of DHS that we can take the time here to answer a few questions and go over that. If there are any other questions for Ann, Anna, and Shannon. So we'll thank everyone in the room. Thank you. Applause. Thanks so much. This was great. And we'll again have the PowerPoint and send out all the information so that everyone can contact you all. So there's another question which really raised a great point. So there was a press release from DHS and in the news last week about new Medicaid funding for housing, and wondering if we can take a few minutes to give you an update on that here at DHS. We will have a full Housing Best Practices Forum presentation on this in late fall, early winter, but I have my colleague here, Becky Malang, to answer a few questions. It's going to look like it's me presenting, me, Adrienne Hannert, but it will be Becky once we figure that out in a second here.
Oh, yeah.
Here, look, I can pass it over to myself, perhaps, or Laura can.
Yeah, I'll give it to you. All right, you're good.
And then, but that's not what you see. How do I put that on?
Well, we can just talk.
Yeah, we can talk.
Let me see the handout so that I watch
and we'll
it.
send
All
it
right.
to you.
So yeah, this is Becky Malang. I'm in the housing area at DHS. We don't want to go too in-depth right now because we just gave you a lot of information about another topic, but because the question came up about the housing stabilization services, just wanted to hop in here and a really quick overview kind of what to expect in the upcoming months. So if you didn't see our news release or the article on the Star Tribune or get one of our emails, 2 weeks ago we had a final approval from the Center for Medicaid and Medicare Services to do a housing stabilization services through Medicaid. So I won't go into too much detail and use too many medical terms, but the big point of view is that we're going to be able to bill through MA for 2 sets of services regarding housing. And so this is huge. We've been, working on this for a really long time, and we're really excited about doing this. The 2 sets of services quickly are one is around, housing transition services. So the first set is housing transition services, which is really developing an individualized housing plan, finding housing, applying for housing, negotiating a lease, all of those types of services. And the second set of services is housing sustaining services, which is about preventing eviction, stabilizing the person in the housing, really focusing on being a good tenant, supporting and finding natural supports and other things. So these are services that are very focused on housing, great complements to the other services that we offer here at DHS that work with people around their disabilities. Our goal is to have these services roll out in July of 2020. We have a lot of system work to do. That's kind of why once we get approved, we still have to wait a while. We have to modify our system so that people can actually be assessed to qualify for them, and so we can actually bill our providers. So with that being said, qualifying for the program, we have some standards. Walk through those just really quick. That's probably going to be a big question too. So our eligibility is around 1, disability. So we're using our disabling condition standards that we use currently for housing support. So if you're familiar with our housing support program, disabling condition language is going to be much lower than a Social Security or a SMART level. It is looking at people that have a disabling condition, but that does not mean that they have to reach such a high level. It includes people with substance abuse issues as well. So just throwing that out, we know that's going to be a big population, and elderly. Then they also would need housing instability. So this can come in either being homeless, being at risk of homelessness. We're not using like HUD's definition for at risk of homelessness. We are creating and using some of our own verbiage so that risk of homelessness could look like a lot more things than you might be used to if you're looking at HUD's definition, or in an institution or at risk of institutionalization. So if somebody's on a waiver and they're, the potential for them to go into an institution is there, that's the other area that we're really looking at. And then, of course, they have to have a need for the services. And, in our future trainings, we'll go into how we identify that there's a need for the services. They have to need housing support services to help them find the housing. So we're really excited about this. We're going to have a lot more trainings. We're going to have a lot more feedback in the future. So look for that. There's going to be one through housing best practices. There's going to be other ones. We don't have any on the calendar yet. I'd let you know about them, but we'll definitely be getting as much communication out there as possible about what this is going to look like. We still are figuring things out. If you have questions, of course, reach out to DHS and we can talk to you about it. But as of right now, I would suggest we are really, really, really working on doing a large communication plan on this. And so if you are active on reading your emails you get from DHS and you open them all, you should be hearing stuff as soon as we know it, or be invited to all of our feedback sessions. So open those emails from DHS, don't ignore them, and you should be good to go. But like I said, we have to work on things, really unexciting things on our systems at DHS, so we do have to do the boring work here to make sure that we can get these out on time.
Great. Oh, and can you just say again the expected rollout date?
Yeah, our expected rollout date is going to be July of 2020. We like to You know, people are always like, why July? That's so weird. We base them around managed care organization contracts and fiscal dates, and again, it's going to be that far out just because it sounds really boring, but we have a lot of system changes that have to happen with how we do our payments and our eligibility at DHS to make these come out. So I know for people who just want to get out there and use the services, that sounds frustrating. It's frustrating for us too, but it has to get done to get the services out there. So just be patient with us as we do that work that needs to get done and hopefully get it out there as soon as we can.
Thanks, Becky. Other questions, Laura? No, we've got it all.
Well, I have a couple of questions. Could you explain, like, back where Anne, kind of going back to the topics of that presentation, could you explain the difference between, like, traditional banking and the FAIR model? Like,
yeah, I mean, traditional banking, I mean, we've got credit unions, you've got community banks, you've got big banks, like Wells Fargo, U.S.
Like,
Bank.
how is FAIR better than another option?
Well, FAIR, not necessarily better. It's all, that's the thing about when you come in, we're going to look at, you know, what you're currently using, what the options are. What's different is that we've negotiated, I mean, the big thing we have seen that FAIR offers that sets FAIR apart in the marketplace, and I'm talking about like the bank, credit union, physical, as well as sort of the neobank or challenger banks that are out there. So think Ally, think the online banks, Chime, Borrow Money, those are sort of the challenger banks. What we're noticing as we scan the marketplace is people are not offering these checking accounts regardless of your banking history. We cannot find, there's a lot of amazing online banks that are really low fee, but it still requires you to have a clean banking history. You can't have any sort of record of overdraft or walking away from fees. So I think been offered regardless of your banking if that's FAIR apart, and then no overdraft. You're going to be hard pressed to find a checking account that doesn't have overdraft fees. And we, in our listening, people said we want overdraft to turn off. If you talk about payday lending, and an overdraft is just an alternative payday loan, right? It's a loan on and it's charging $36 per transaction regardless of how much you overdrafted. And the fact that it's offered in the community is really unique. A lot of banks, we're really grateful and pleased that Sunrise Banks is such a partner in this, that they have said, we're gonna figure out how to train your folks, your frontline staff, your volunteers, your staff to enroll in these FAIR accounts. Because people do not want to walk, a lot of people are really intimidated. Not to mention there are banking deserts in the Twin Cities. People are intimidated to walk into a bank. People have had like historical disinvestment in communities. So another thing about FAIR that sets it apart is that you can walk into a nonprofit like Prepare and Prosper, like LSF, and get FAIR and have a conversation with somebody you might trust more than a banker. So I think that's different. But yeah, we're not the cheapest out there. We're also going to give you this really a coach approach to getting bank accounts. So you're going to upfront hear how does this fit in your financial life? What are your goals? There's no sales as part of FAIR.
Thank you.
Yeah.
Great. Well, thanks to everyone for attending another Successful Housing Best Practices Forum, and we'll see you back here in October for another webinar. We'll send out the topic as soon as we know it for sure. But thanks, everyone. That's it.
Thank you all for presenting.